Hello, and welcome to AI Market News by LM. So, let's get right into it. US tech stocks are taking a nosedive, and everyone's pointing the finger at one thing: AI. But is it really that simple? Is AI the killer here, or is something else going on? We're gonna dig in and find out.
You know, this recent headline just says it all. A stock market doom loop is hitting everything that touches AI. Wow, it really captures the mood right now. It's this idea of a self-feeding cycle of negativity, right? A doom loop that's just dragging down anything even remotely connected to AI. So the big question we have to ask is, why now? What's going on?
And the scale of this, I mean, it is just staggering. We are talking about $1 trillion. That's with a T. $1 trillion in market value just gone, wiped out from the biggest tech companies, the ones that are supposed to be leading the AI revolution. So let's be clear, this is not just some small market dip. No, this is a major event, and we really need to get to the bottom of what's driving it.
Okay, so let's dive into our first section, the tech stock tumble. We're gonna start by investigating this huge sell-off that has really shaken up the markets.
And when we look at the numbers, they are just brutal. I mean, look at this. Amazon is having its longest losing streak in 20 years. Both Amazon and Microsoft are down over 16% just since late January. And even Alphabet, Google's parent company, which you'd think would be crushing it with AI, is down 11% from its peak. All of this pressure has pulled the whole NASDAQ index down more than 2%. The big takeaway here is that this isn't just one company having a bad day. Nope, this is a sector-wide crisis of confidence.
So that leads us right into our next part, the great AI paradox. This is where things get really interesting. What's actually causing this crisis? Well, it turns out it's this really weird paradox. The market is basically being ripped in two different directions because investors are scared of two totally opposite things at the exact same time. Okay, so check this out. On one side, we have the fear of disruption. This is the idea that AI is going to be so successful that it just completely demolishes existing industries. Think real estate, insurance, logistics. So investors are getting spooked and selling off those stocks. But then on the other side, we have the fear of a bubble. This is the worry that the trillions of dollars being pumped into AI by giants like Amazon and Microsoft, well, that money isn't going to make any real returns for a long time. So what happens? Investors punish those companies for spending too much. It's this perfect catch-22. You're damned if you do, damned if you don't.
And this isn't just our take. Anthony Saglambini, he's the chief market strategist over at Ameriprise, he summed it up perfectly. He said, it's a no-win situation. I mean, think about it. It used to be that investors loved seeing companies spend big on innovation, right? On the future. But now, they're demanding a timeline. They want to know exactly when they're going to see a return on that investment. It just goes to show you how deep the uncertainty is right now.
Okay, let's shift gears a little bit. Because this whole thing isn't just happening in the spreadsheets of Wall Street. No, the AI boom is creating a very real, very physical supply chain crisis. And it all comes down to one tiny but absolutely crucial component.
What we're talking about here are high bandwidth memory chips. You're looking at some from SK Hynix right now. I mean, these things are literally the lifeblood of the entire AI hardware boom. They're the secret sauce, the essential part that makes all those powerful new AI processors actually work. And here's the kicker, the world is basically running out of them.
Yeah, the situation has gotten so bad that some people in the industry have actually started calling it Ramageddon. You heard that right. It's a mix of RAM, as in computer memory, and, well, Armageddon. That tells you everything you need to know about how serious this is.
And the consequences? Well, they're hitting stuff we all know and care about. This absolute mad dash to build AI data centers is just sucking up pretty much the entire world's supply of these high-end chips. So what does that mean for us? Well, it means Sony might have to push back the next PlayStation all the way to 2028 or 2029. Nintendo is singing about jacking up the price for the Switch 2. Smartphone makers like Xiaomi and Oppo are cutting their future shipment goals. Cisco stock took its worst hit in 4 years. And get this, Elon Musk even said Tesla might have to just build its own memory factory to deal with it. It's wild.
All right, so now that we've seen the direct fallout, it's really important to zoom out. We need to remember that this whole AI drama isn't happening in a bubble. To really get a handle on why the market is so jittery, we have to look at the wider economic context. So let's do that.
So, one of the best ways to, take the market's temperature is with something called the Fear and Greed Index. It's a really neat tool. Basically, it looks at a bunch of different things to figure out if investors are feeling greedy, which pushes prices up, or if they're feeling fearful, which, you guessed it, drives prices down.
Another key indicator we're looking at is the CME FedWatch tool. Now this one is all about predicting the future. It analyzes the markets to calculate the probability of what the Federal Reserve is going to do with interest rates at their next meeting. And as we all know, that decision can change everything for the economy.
And here's what's so interesting. What these tools are telling us right now is that there's been a really big shift in expectations. According to the data, traders were originally thinking we'd see maybe 2 rate cuts from the Fed this year. Well, now they're pricing in 3 or even more. Some experts even see a possibility of 100 basis points in cuts. What that signals is a growing concern about the overall health of the economy. It's basically like pouring gasoline on the fire of all this market anxiety.
So what's next? What should we be keeping our eyes on? Well, according to investing.com, even though today, February 16th, is a US holiday, the big one to watch is the US PCE index data coming out on Friday. This is the big one. It's the Fed's favorite way to measure inflation. And frankly, this number could be what either calms everyone down or sends the market spiraling even more.
All right, we've looked at the tech sell-off, we've unpacked that crazy AI paradox, we've touched on the chip crisis, and we've taken the temperature of the wider market. It's time to put all the pieces together and figure out what it all means.
So let's go back to our big question from the beginning. Is AI the killer? The simple answer is not exactly. It's a lot more nuanced than that. Here's the real verdict. AI isn't the bad guy in this story. Instead, think of it as a massive catalyst for uncertainty. This whole sell-off is just the market's chaotic and honestly pretty painful attempt to figure out how to price in 2 enormous conflicting risks at the very same time. The risk that AI is a bust, and the risk that it's so successful it changes everything. That Ramageddon chip shortage we talked about, that's the real-world consequence of this AI arms race. So in the end, the market really is trapped in a doom loop that it created for itself.
And really, all of this just leaves us with one massive lingering question for the future. We are witnessing the very beginning of a huge technological revolution. So as AI keeps rewriting the rules of our economy, we have to wonder, which industries are next? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.